Welcome back. Mortgage rates now at a 20-year high. Take a look at the 30-year fixed rate, skyrocketing to nearly 7% this week. Rising interest rates continuing to cool down the housing market. The Federal Reserve aiming for a soft landing for the economy. But my next guest says he believes the housing market is in shape and headed for a, quote, crash landing. The Peebles Corporation founder, chairman, and CEO Don Peebles is with us, and he is having real estate development projects all across the country. Don, it's always a pleasure to see you. Thanks for being here.
Great to be here. Thank you, Pat.
You know, when I saw the housing starts numbers over the last few months, I knew that higher rates was beginning to create demand destruction. How would you assess the market right now, and what do you say about 7% mortgage rates right now and the impact?
Well, I think, one, the housing market is on its way into a recession. We're going to see price declines. The price declines have already begun to take place. Interest rates have cooled demand significantly because debt service on a single-family mortgage or a home mortgage, for example, has gone up more than 100% now. So you've priced a lot of buyers out of the marketplace. And I look at this as though we had this freight train out of control, speeding up with low interest rates, and no one looked to start slowing it down or stepping on the brakes. And now all of a sudden it's going to come crashing into the station. The momentum is too strong in the housing market to slow it down right now. And so what's happening now is these interest rate increases are giving moderate slowdown. But you're going to see at some point the economy and the market react to it very aggressively, and the pendulum is going to swing and prices are going to decline very rapidly.
So prices declining in terms of the price of a home. I mean, as rates move higher, that makes your mortgage that much more expensive monthly. Is that causing people to say, forget it, I'm not going to buy that home now, I want to go rent? And then they get into the rental market and there's sticker shock there as well.
Yes, I do believe that more and more people will stay in rental homes, or they won't trade up. One of the important parts of the housing market is homeowners trading up for a larger home or relocating to another geographic location and buying a new house. That activity is going to slow down dramatically and has begun to already. And then while rental rates have gone up, the important aspect to look at is it's still a lot less expensive to rent than it is to own. And that is what's going to compel more people to rent. And that's why I believe that rental housing is going to continue to be resilient, because it can pass on interest rate increases to its consumer.
It's a great point, because when you look at those companies that have pricing power, those are the ones that are going to do well, even in a 40-year high inflationary environment. I want to get your take on what all of this means for the midterm elections, just a few weeks away now. What are your expectations going into November? And then I've got to get your take about what just went on in the L.A. City Council, because I know you've got developments there as well as across the country, Florida, New York. What are your expectations for the midterms, Don?
Well, I think the midterms, I think that you're going to see the Republicans take control of both chambers of Congress. I think these high interest rates, this cooling of the market, this fluctuating job market depending on geographic locations, and the fear of a greater recession has many Americans, and most Americans, feeling that the country is going in the wrong direction. And so it's going to look to make a change. And then we're going to see a seismic change in 2024.
Yeah, what are
It'll be more like 1980.
What, I'm sorry, Don?
It'll be more like 1980. I mean, we're right now in 1978 when Carter was president and interest rates were being used to control inflation because inflation was out of control, and it didn't work. And ultimately, it strangled the economy. And I think these interest rate increases are going to have the impact of strangling our economy, especially the housing market.
Yeah, I just wish they understood what they were doing. It just doesn't seem that they're acknowledging the impact of this bad policy at all. Don, I know you've got developments in L.A. and you've got thoughts on what just took place in the city council.
Very shocking. We have a $1.6 billion development in downtown Los Angeles in Councilmember Kevin De Leon's district. And to my shock, he was recorded along with these other two council members making racist comments about blacks. And we couldn't figure out, frankly, he's been in the city council for 2 years. We're building the largest economic engine in his district, committing to 30% minority and women-owned business contracting. And we've only been able to meet with him one time for 15 minutes in 24 months. It's just amazing. But now those recordings make us understand it. But what's really disappointing is my party, the Democratic Party, has accuse Republicans so frequently, especially the far left element of our party. And yet here we have these ultra-liberal Democrats in a room making these racist comments on how to dilute the voting impact of African Americans. And that's something that they accuse the Republicans of. And so, I mean, I am so disappointed, so embarrassed, and so angry about this kind of conduct of our party. And I think that African Americans are going to begin to take a closer look at some of these leftist policies and how they have a negative impact on our community.
Yeah, that's very discouraging. And I know that that is one of the reasons that so many in the black community, the Hispanic community, and by the way, independents overall, the independent bloc, the independent voter, they're moving to the GOP right now. So we'll see what those midterms look like. Don, it's always a pleasure to talk with you. Thanks so much for spending the time.